So hello everyone, my name is Thomas Krog. I'm the CEO of Copenhagen Fintech. Super proud of being able to establish or put this event out and with some prominent speakers today. So just to go through the agenda of today, doing a short welcome here, and then in a few minutes, I'll leave the virtual stage to Ronald Goose, Global Head of Banks Research and co-head of Fintech Theme Group in Citibank. After Ronald, we'll have a presentation of Visa's new strategy for cryptocurrencies, presented by Nicola and Helen from Visa. 2:10, we're going to be joined by Circle, presenting how to create a seamless payout experience across borders. And this presentation will be done by Riganetto, VP Product at Circle. 2:30, Settlement. We'll be doing a presentation around testing B2b payments. Settlement is one of the companies that's just been in our incubation cohort, latest incubation cohort, and now been accepted as part of the Danish FSA's regulatory sandbox. 2:40, we're going to be doing a panel discussion on the future of smart money. We're going to focus a little bit on what is happening locally in Denmark with some of the prominent crypto and blockchain companies. Going to be joined by Register from Coinify, Anders Laursen from the Danish Bankers Association, Finance Denmark, Jon Hasling Kyd from the Danish Financial Supervisory Authority, and Simon Osager, startup Januar.io, previously Chainalysis. I'm going to be moderating that discussion, and then we're going to end up with Professor Fritz Henklein from University of Copenhagen doing the official launch of a research paper called Contract-Backed Digital Cash. And then 3:30, a quick wrap up and end of the session. So really looking forward to this. Thank you so much all for joining us. And I'm just gonna, people are still logging on. So there's no doubt that this topic is super hot, and we are seeing a lot of interest in Denmark. There's also a lot of discussion in this. I just took the liberty to take some of the headlines that I could quickly put together around what is happening in this space. So we're very much looking forward to getting your perspective around it. So I think without further ado, and with this background, I'm gonna stop sharing my slides here and hand over the virtual mic and stage to you. Welcome, Ronit.
Thank you. Thank you, Thomas. Let's see if I can manage to screen share. Oh, sorry about that. Give me a second.
Good to see that.
Yay. We got that. So it's a pleasure to present some of the key takeaways of our recent report, Future of Money. Thomas and I have had, and Citi more broadly, a relationship with Copenhagen Fintech that goes back several years. And I'm very proud to present this report for the first time in a forum in the Nordic region. If you want to look at the underlying report, you can just Google it while I'm speaking. Just put in this title, which you can see on the screen, Future of Money, and then add GPS, and my name or Citi, and the report will pop up. But you don't need the report. I'll be using a few slides to explain our thoughts. And first, I'm going to try to define what we mean by digital money, because we're really talking about digital money 2.0, tokenized digital money. You could date it from the Bitcoin white paper in 2008, 2009. Obviously, we're going to talk a lot more than just Bitcoin. We're going to talk about what's happening in terms of central bank digital money. We're going to talk about what's happening in terms of big tech, sort of platform companies trying to do their own tokens. Will that work? Will that not work? And then I guess we can't not talk about crypto, decentralized crypto, Bitcoin and friends. Probably the first thing we should do is define what we mean by digital money 2.0. A lot of people ask me, but Ronald, I bank online, I use my Citibank online, or Nordea or Danske, whatever, I'm banking online already. Or if I'm in a company, I'm moving sometimes millions of dollars or krona every day. In fact, big banks around the world typically move trillions of dollars every day. So all of this takes place digitally. What do you mean by digital money 2.0? And what we're talking about when we talk about digital money 2.0, as I said, is it's tokenized money, not account-based money. So imagine your banknote. I mean, I know we don't use banknotes. I keep this in my wallet just for conferences and webinars now. I'm usually all digital, but this banknote has particular characteristics. If I hand this to Thomas or to you, I transfer value directly. It's a person-to-person transfer of value. It's a bearer asset, we say in English. It's a bearer asset. Whoever has this asset, whoever bears the asset, owns it. Digital money 2.0 is the digital or electronic version of a bearer asset. So whoever possesses the token owns it. And that creates both opportunities for maybe more frictionless payment, real-time payment, but it also creates risks. And we'll talk about that in the rest of this presentation, maybe in Q&A. Now, all forms of digital money 2.0 or tokenized money, there are lots of different forms. Central bank digital currency is just like this. The value is set by the central bank or the finance ministry or some centralized body, a state-backed centralized body. And that's at one end of the spectrum. At the other end, so that's CBDCs. At the other end of the spectrum is decentralized crypto, where the value isn't set centrally, it's set by supply and demand. Just like any commodity, like gold or platinum or silver, it's set by supply and demand. And the price as a result can be volatile and can move, but there's no one in control. And that's the beauty, or that's the attraction for decentralized crypto. So a lot of people who've come into digital money or crypto from the decentralized world look at CBDCs with horror. They see this as this, potentially ultimate surveillance state. It's something that they feel deeply uncomfortable with. But for us, looking at it from more of a slightly analytical or academic perspective or a policy perspective, I see it as one spectrum. It's tokenized. It can be blockchain-based. It doesn't have to be blockchain-based. But the underlying technologies are often the same or similar. But the one big difference is control and governance. CBDCs, centralized control, Bitcoin, ETH, Ethereum, decentralized, no control, controlled through an algorithm. Big tech or stable coins or big tech issued stable coins are sort of floating in the middle. Stable coins by definition are pegged to an external value. So it could be the US dollar, it could be gold. So there's a link to an external asset. And so the value is set like that. But at the same time, the technology underlying the stablecoin can be a decentralized blockchain. It can even be a permissionless blockchain. So it's in some of the tech governance, in some ways, it can be closer to crypto. But DM and the Facebook project or Facebook and Friends project is somewhere, the technology is blockchain, but it's into the governance and control closer to the central bank end. And the power potentially of these big tech platforms is such, it's one of the reasons why we have all this discussion around CBDCs to start with. Now, I've talked already about some of these different types of form factors. The main point I want to make here is that our view, and this is, I should probably say as well at this point, I speak as an independent analyst employed by Citigroup. I don't represent the official company line. So everything I've been saying for the last 5 minutes, and I'm likely to say for the next 15, 20 minutes, you should take as the view of Citi Research and me as an analyst, not the company. Our view from Citi Research is that all these form factors on digital money 2.0 are going to grow. The TAM, if you like, is going to grow, but not at the expense of each other. We don't think that stable coins are going to come along and kill cryptocurrency like Bitcoin. We don't think that CBDCs will kill Bitcoin. In fact, if anything, if you had CBDCs, they could be quite an interesting on and off ramp into Bitcoin. A lot of Bitcoin transactions today are done, particularly in Asia, using a USDT, so Tether, as the kind of gateway currency. If you had a CBDC, you maybe don't use Tether as the gateway currency. So we view this very much as digital money 2.0 over the next 5-10 years are going to grow together. Whereas e-money or digital money 1.0, they'll probably grow, but not at the rate we've seen in the last 20-30 years. And other form factors, and this is less relevant in Scandinavia, this is more relevant in the US or elsewhere in the world, other form factors like cash and checks will decline further in relevance and importance. Now, what are the implications? Why does this matter? It matters at all levels. It matters in terms of the financial system. It matters in terms of geopolitics and international policy. It matters in terms of you as a citizen vis-a-vis the state in a domestic setting. There are all kinds of implications, either as a consumer, an investor, a citizen. And let's run through some of the big ones. CBDCs in particular are a threat, a potential threat to the retail and commercial banking industry. And in many ways, more so than decentralized crypto. Because should you have a CBDC without very tight controls, you could see an impact on funding, deposits, retail deposits, and also corporate deposits, move out of the banking system. Even if you have a two-tier system in the CBDC world, a two-tier system is one tier is where the central bank issues the CBDC and is a direct-to-consumer, D2C, direct-to-consumer business model. Don't think that's going to happen in many places in the world. Most places in the world, the central bank will have a B2B2C model or a G2B2C. So the government or the central bank will go to regulated institutions like other commercial banks or payment companies who will then distribute CBDCs to consumers and investors. So it'll be a B2B2C model. Even in that two-tier or B2B2C model, there will be a risk in that even if the bank is still distributing CBDCs, that will be an asset that they will hold in custody for their clients. It'll no longer be a deposit. And that has quite profound implications for fractional reserve banking. There are other implications as well in terms of competition from a banking industry perspective, because the growth of CBDCs could lead to further acceleration of the growth of wallets. So wallets, digital wallets, and typically around the world, payment companies have been better. The likes of the PayPals or the Alipays, the payment companies have been better at doing digital wallets than banks. Scandinavia is somewhat unusual in that there have been some good examples of, in Sweden, banks getting together, in Norway and Denmark, an individual bank leading this and then bringing in other banks in terms of building wallets. Generally speaking, banks have been pretty bad at building in the last 10 years, 15 years. So there is this other problem that this could just further accelerate financial services into platform companies and big tech platform companies. All of this is, for the retail commercial banking industry, a headwind, a headache, a negative. For investment banking and capital markets, it's different. The industry looks at it and goes, this could be a new revenue stream. All these decentralized cryptocurrencies, this whole new emerging economy. So whether it's wallet companies getting listed in the US or miners getting listed in Asia, these are all new companies that require capital, that require, sometimes traditional equity capital from the fiat world. And so for the investment banks, from an equity capital markets perspective, this could just well be a straight positive, with one big caveat, which is an extreme. If DeFi really takes off, which I don't think happens in the next 5 years or so, but if DeFi really takes off, DeFi obviously starts sucking away capital and resource from the traditional financial sector. So there's a kind of existential threat from DeFi. But the base case is that this is for investment banking, capital markets, just another revenue stream. For the payments industry, or payment form factors, and again, particularly in the US or here in the UAE and Dubai, where I'm based, there's a lot of use of checks. You're writing checks all the time. I know that might sound weird if you're in the UK or in Scandinavia, but in the US and in UAE, we're still writing checks all the time. There's obviously huge use of credit cards. And again, CBDCs or stable coins taking off could lead to replacement of some of these form factors. It could also lead to some payment companies, if they're forward thinking, further consolidate their kind of gateway proposition or their kind of gatekeeper proposition. It could push them into more direct to consumer and almost away from B2B, accelerate their shift into more of a B2C type model. So for payment form factors, significant changes. For payment companies, could be winners and losers. The final point I want to make in terms of implications is, for a policy perspective, a lot of people say, particularly from a Chinese central bank digital currency perspective, whoa, this is going to have huge implications. It's going to threaten the dollar. The dollar is the reserve currency of the world. The ERMB, this is it. It's been a good run, US dollar. You've had it since the 1930s and definitely since the Second World War. Your position at the apex of the international financial system is finally coming under real threat. I think that's BS, personally. I think when it comes to trade, international trade, it's definitely the case that the US dollar is beginning to, and has been for several years, reduce in importance. A lot of international trade is denominated in the euro and in RMB. And that trend, particularly RMB increasing, will continue. US dollar is not a dominant, it's one of but it's not the sole dominant currency when it comes to trade. Now, what people forget when they do this analysis is that most currency is used in financial assets, not in trade. So the stock of financial assets around the world is several hundred trillion. And the dollar remains for a lot of reasons, the predominant, like the dominant currency when it comes to financial assets, because the financial markets in the US are deeper, more liquid, more transparent, and the rule of law, lack of capital controls, all of this makes it a very difficult asset class to compete with, which is why I don't see the dollar in the next 10 or 20 years being replaced as the hegemonic currency. But there is, on the trade and the invoicing of trade side, there is going to be a reduction in the role of the dollar. The last point is, and this is somewhat controversial, is domestic policy. Some central banks like the idea of tokenized money, programmable money, because like I said, programmable, you can program this money to have certain features. And actually the COVID situation, as all of you are aware, has been a great case study. If you'd had programmable money at scale, rather than the US government sending out checks or even doing direct bank transfers, which then end up on day trading accounts or whatever, they could have sent out programmable money saying this money has to be used for specific use cases like food or shelter, rent, supermarkets. You can't use it to just go gambling in Vegas or in the stock market. So programmable money from a policy perspective has certain advantages, both fiscal and monetary, but it also has disadvantages from a surveillance society, civil liberties perspective. People may not want to have programmable money where someone at a central organization, the touch of the button, can change the value of that money. It sounds very much like Big Brother 1984. And so there's all kinds of policy issues and socio-political issues around this. Maybe my final couple of slides before I wrap up and open it up to Q&A is why are we all talking about this now? Whether it's, for Bitcoin and more recently ETH and Ethereum, it's obvious there's been an explosion in prices. We've seen prices for Bitcoin from Q4 last year really take off, Q4, Q1. Then in the last month or two, it's been very much about the non-Bitcoin altcoins. So Ethereum, ETH is I think it doubled in the last week or so. I haven't checked in the last hour, but it's had a very strong positive move overall. And you see this in the top right-hand side here on the page. It's over 2 trillion now. If you're watching this not live, maybe it'll be a very different number, but right now it's north of 2 trillion. That makes it the decentralized crypto world too big an asset class for banks and policymakers to ignore. 2 trillion is big enough that banks around the world, big banks, are looking at it going, we need a crypto strategy, or at least they're saying, what should our crypto strategy be? That is very different to 6 months and definitely 3 years ago. The last kind of bull run we had, proper bull run in Bitcoin and Ethereum in 2017, and the kind of ICO speculation and bubble, that was very much a retail driven phenomenon. This time around, you're getting more institutional interest into crypto and decentralized crypto. Now, big health warning or caveat, and what we're talking about is people talking about doing things, or some people like, the PayPals and the Visas of the world introducing some pilot projects and some projects. Most banks, most big banks are just slowly stepping into decentralized crypto. You're going to see over the next 6 to 9 months, I imagine, increasing regulatory clarity from the major regulators around the world, including the US. And as that happens, that'll make it easier for banks to get involved in crypto. Sometimes you get the feeling from listening to people outside the banking industry, from fintechs or from particularly the crypto world, it's banks are slow or asleep at the wheel. It could be that, but actually there's another reason, which is if you're a bank, you cannot do an activity unless your regulator says, yes, you can do this activity. So it's very different to if you're a food delivery app, for example. If you're a bank, you can't do a new activity without explicit permission from your regulator. And crypto is a new activity. So there's a process by which the whole banking industry in every country around the world will go through, and they'll be talking to their regulator saying, can I do this? Can I do that? And what's happened in the last, particularly in the US, in the last year or so, or maybe longer, is that the amount of knowledge of the regulator has increased significantly. And sometimes, you look at regulators around the world, they might have even more knowledge than some of the banks now when it comes to crypto matters and blockchain matters. So the knowledge has increased, but we're still in the space where the rules haven't quite caught up with the knowledge. And it's changing fast, but until the rules change, and this is a very important point, it's like a super important point, a bank cannot get involved in crypto. Today in the US, for example, you can do futures on behalf of clients, but you can't hold Bitcoin or other cryptocurrencies as principal. It's just not allowed. It's not because the bank doesn't want to, it's just not allowed. Now, a tipping point in terms of knowledge and interest has been, as I said, the last 2 or 3 years, but you can see in this chart on the bottom left-hand side, a significant increase in more, this chart is some data from the Bank for International Settlements in Basel, BIS, the central bank. And this is an aggregation of all the speeches they've been giving on digital money and CBDCs. The blue ones, the light blue ones are negative speeches, the bars, and the gray bars are positive speeches. And you can see what happened here in 2018, 2019. So really in 2018, you see this, beginning increased interest in CBDCs, digital money, but it's still mainly negative. You can see how big the blue bars are, much more negative than the gray bars. And then look at 2019, the gray bars start becoming bigger and bigger. So you start getting more and more positive speeches around CBDCs. And one of the triggers was the introduction of the Libra project by Facebook and their allies and their friends. That announcement led to many more central banks and policymakers going, well, we could try to ban this technology, but let's face it, it'll probably fail. You can't ban technologies. You can make it really hard. It's like, you can outlaw, for many years in Sweden and Scandinavia, alcohol was outlawed. You can outlaw these things. but you can't wipe it out completely. And this is a global digital asset. So the view they took was this technology, well, let's try to tame it or control it, or let's try to do it ourselves. And so you've seen, particularly in the last 12, 18 months, a lot more positive comments from central banks around CBDCs. They want CBDCs to grow rather than have big tech tokens or decentralized crypto to be the kind of main form factor. But our view is that CBDCs growing will just end up being like a gateway product almost, or a conduit into decentralized crypto rather than killing decent. We think it'll just grow all together. It's like having vanilla ice cream and strawberry ice cream rather, maybe you like them both. One last slide from me, just to put all of this into context, into size, into numbers. I said before, decentralized crypto is north of 2 trillion in terms of value. CBDCs potentially could be even bigger. If you look at the top left-hand chart, this shows you the size of liquidity, like cash and banknotes. That's M0. There's about $14 trillion of cash and banknotes. And if you do M1, which includes current accounts, so liquid bank accounts, there's close to $70 trillion. So those are the liquid assets in the world, not government bonds, not equities, just cash, not just banknotes, but current accounts and banknotes. That's a very large asset class, if you like, 70 trillion, that part of this could get digitized. And when you step back and you think about what's happening on crypto, particularly in a consumer context, it's just the latest leg of the fintech revolution we've had for the last dozen or plus years. In fact, I was having a conversation with a fintech friend of mine in London by instant message today, and he was talking, he tweeted about this. He was saying, oftentimes the fintech community look at crypto and tokenized money and have the same reaction that the banks used to have 5 years ago when they looked at fintech. I still remember when banks looked at fintech around 2014, 2015, the reaction, even in Scandinavia, was, no, nothing's really going to come off it. We can do our own apps, and our apps will be as good as the fintech's apps. Nothing will really come off it. And now you fast forward to today, and you look at the size of the quoted payment and fintech sector. I've slightly cheated. I've included sort of old, I don't say legacy, but let's say incumbent payment companies in here. But you look at the bottom left-hand side here, the market value, the equity market value of quoted fintechs and payment companies in the US, about $1.5 trillion today. That was less than 100 billion 10 years ago. That's been a huge increase in equity value or value creation. European banking sector is about half this, approximately. The US is still quite big. So just this kind of 10-year, this decade-long payments and fintech boom we've had. So you look ahead to the next 10 years, something not exactly the same, the history doesn't repeat, but it does rhyme. Something like that could happen in the crypto and decentralized crypto and the centralized crypto world. You could see significant amounts of value being created in not just the protocol layer, like i.e. Bitcoin and ETH, but the application layer, the businesses and programs being built on top of the protocol layer. I'm going to stop here. If you found this interesting, again, please go and have a look at the report. Just Google Future of Money, my name, or Future of Money, GPS Citi. And it's a 110-page report. You can my email and contact details are in there. You can contact me directly, and I can carry this conversation on. I think, Thomas, we have some time for Q&A.
We definitely have some time for Q&A. And if I can just direct you to the Q&A, to the Q&A box, we have one there. It's you can see that. Do you see the question, Ronan?
Mm-hmm. Yeah. Yeah, sure. So let's take the 2 points here. The market, the value of the currency is determined by the market, not by governments. I guess this is, you're absolutely right in terms of the value of the currency cross-border. So if I'm replacing my euro for krona or my euro for dollars, the exchange ratio is determined by the markets. Obviously, long-term as well, the value of the currency is determined by society, by economic factors such as inflation, the purchasing power. I was simply using in that original slide, my slide 2, I was saying that the value of this note or the equivalent is set by the central bank, as in we all agree as a society, this is worth 10 of something. The purchasing power of this over time isn't set by any centralized body, but the unit is. I used a shorthand. We can have a longer conversation if you like about this offline. But by contrast, and this ties into actually your first point, your first question, is this a speculative bubble? So in a way, what you're referring to there is the volatility in the price, right? By speculative. You could also be referring to the fact that maybe there's no intrinsic value. Let's come back to that. But let's stick to, I assume by speculative you mean volatility. You're very welcome to add another question if I'm getting this wrong. And that was my point in that chart 2 or page 2 of my presentation, that in the short term, on a day-to-day basis, unless you live in Zimbabwe or Venezuela or Turkey, your currency doesn't move very much. Your currency doesn't move very much. You know, even comparing to cross-border or inflation, unless you're living in some kind of Weimar Republic period, inflation doesn't change every day. The Bitcoin price does have huge volatility, 10x or 15x. And in that sense, it's a speculative bubble. I should also stress that we're not giving any investment advice on this webinar. We're not telling you to go and buy it or sell it, just to be clear. All of that said, there's a big debate to be had whether there's any intrinsic value in crypto, whether it's Bitcoin, Ethereum, and others. So the value in crypto or decentralized crypto comes from the value of the network. The number of people who are willing to use Bitcoin and trade it between themselves because they see this as a store of value, that creates value. It's a bit like a social media platform. If all of us say there's no value in this, there is no value. But Bitcoin is like the entry level, if you like, the original crypto. Since 2014-15, you've had the growth of whether it's Ethereum and other projects, which are actually, you're building on top of that protocol layer. So you're building basically solutions, whether it's allowing trading to take place, whether it's allowing technology projects to get funded. And so the value when it comes to DeFi, the value when it comes to Ethereum-based projects is different to just having a network effect. The network effect is just for Bitcoin. If I didn't answer that question very well, you're very welcome to email me or contact me via any of your preferred social media channels. There's another question here. European banks are worried about the impact of lending if their access to deposits is weakened due to competition with token-based products. What is your assessment of this argument? Yeah, very much so. Many bank systems are very highly dependent on deposit funding. And so if you did see an uncontrolled shift, which I don't believe central banks will allow, but in theory, you could see a significant shift out of commercial bank deposits into central bank deposits. Where that's most likely to happen is in weaker financial systems, so unlikely to be in Western Europe. In weaker financial systems in emerging markets, in Asia, particularly Africa, Latin America, where there's no deposit insurance scheme or it's very limited, there, having a central bank liability that you can hold, because CBDC is a central bank liability, makes it much more attractive as an asset, than a commercial bank liability. So I think because of these risks, there'll be quite strong regulation around how much you can put into a CBDC. Because if it's uncapped, if it's like unlimited, there could be a lot of flight away from bank deposits. Now, some banking systems are already actually very good at managing with small amount of deposits. So if you look at banking systems around the world, you look at an Israel or a Hong Kong or a US, those countries actually have a lot of deposits relative to lending. You look at a Sweden, for example, lesser extent Denmark, there's actually a limited amount of deposits already in the banking system relative to lending. because the biggest consumer asset, which is mortgages, have been largely wholesale financed in Scandinavia. So it very much depends on the banking system. There's no kind of one size fits all.
Great, Ronit. I can see there's and I just need to see here, there's a few questions in the chat also.
Oh, yeah.
Let me just see here. So there's we have time for a short one here. Insights on how banking lobbying impacts the CDBC development. I don't know if you have any insights on that.
I'm not on the lobbying side of the bank, so I don't really know. But I mean, big picture, I think most central banks and commercial banks 3 years ago would be pretty negative about CBDCs. What you've seen happen in the last 2 or 3 years is much more work done in terms of both technical design factors, but also in terms of real world financial stability implications. Very few central banks want to deliberately create instability in the banking system. And so if the commercial banks come and say, hey, if you have a 1-tier CBDC rather than a 2-tier, that's going to cause us big problems. The central banks listen. You can say it's lobbying, but it's just basic common sense, really. And I don't think the commercial banks need to go to the central banks to point this out. So I think there'll still be lots of, I mean, the Chinese of the major countries are the only ones that are in pilot. There are some smaller countries that are live in the Bahamas, Caribbean, but among the major countries, the Chinese are the only ones live. It'll take a few years before the ECB and the Fed and the Bank of England get going with pilot schemes. So there's 2 or 3 years probably of lobbying or dialogue to be had.
Great. Thank you very much, Ronit. I think I don't know if you have if you have time for staying on a bit and maybe answering some of the questions in the.
Sure, I'll try to stay on.
That would be really great. So thank you so much for that. I'll now hand over the stage to Helen and Nicola from Visa. Hi, Helen and Nicola, and I'm just gonna share my screen and yours.
Thank you very much. Hi, everyone. So I'm leading the engagement with the startups and the fintech community and support partnerships for the Nordics and the Baltics at Visa. So Nicola and I are very pleased and honored to participate in this meeting and virtual event today, together with Circle, our Visa partner. So you all know about Visa, so I'm going to skip the details about our key figures, but people tend to think we are a credit card company, but we are not. We are a tech company, even though I have to admit that it took us some time today to connect to Zoom. So basically, we enable players in the payment space by giving them access to our vast and global network and capabilities. We have already transformed our network into an open platform. We have already now very well established innovation centers to give the opportunities to our partners to co-create new consumer experience together with Visa experts. And we are investing a lot in building new partnerships with the next generation of paytech companies. Next slide, please. So in addition to getting instant access to the world's largest and most secure payment network, Visa helped the fintechs navigate the payment ecosystem and get to market fast and efficiently, thanks, for instance, to our fast track program. So it's clear that there is an acceleration towards digital payments with a growing number of ways to pay and to be paid. Therefore, Visa's ultimate goal is to become the network of networks that connects payers and payees, regardless of which payment type or rails they use. So today's topic is about the future of money. So we are definitely focused on delivering the greatest value to people, businesses, and economies everywhere, regardless of currency, channel, or form factors. And crypto is no different for us. So as digital currencies are getting more and more popular, we help them become more secure, useful, and applicable for all payments. So we are working, for instance, with wallets and exchanges to enable users to purchase these currencies using their Visa credentials, or to cash out onto a Visa account to make purchase with traditional currencies at any merchant where Visa is accepted. As of today, 35 global digital currency platforms or wallets have chosen to issue with Visa, including Coinbase, Crypto.com, BlockFi, Fold, or Bitpanda. So it is in this context of opening up our network that we partner with industry leaders like Circle to help connect Visa clients to the growing USDC payments ecosystem. So before giving the floor to my colleague Nicolas, who is heading the new payment flows and who will share our digital currency strategy with you, I just would like to bring your attention to one program. This is the next slide. I will be super quick. So it's a Fintech Global Innovation Program which is called Visa Everywhere Initiatives. So I guess there are some fintechs joining this event today. So if you believe your startup can solve payments and commerce challenges of tomorrow, including crypto, you should definitely enter our competition and apply before June the 18th. So winners at the global finals will receive monetary prize, and they'll be able to use and invest this money in their company the way they want. So I'm done with the introduction. So Nicolas, over to you. Thank you.
Thank you so much, Helen. As mentioned, my name is Nicolas Plekas, and I had the new payments flow practice for Visa Consulting Analytics Europe. And by the way, absolute pleasure to be here today, and thanks for the invitation and the opportunity to represent Visa here and kind of give you an overview of our digital currency strategy. Now, I thought that, and of course, it's a pleasure to be share the stage alongside with Ronit and Joao and Helen. I thought that a good way to frame the discussion is just to kind of give you an overview of how far we have truly come along over along this journey over the last 12 years. And as Thomas is struggling to zoom in this slide, I'll try to kind of bring it to color without you actually seeing everything on it. But as you can kind of potentially see, there is a Bitcoin logo and 2009 on the kind of far left. And it really showcases kind of how far the whole ecosystem industry and all of us have come along in the last kind of 12 years. And by the way, when Bitcoin was launched in 2009, I was at university, and really, if you think about it, at that particular moment in time, there was no real use case and understanding, and really a way to interact with these products. And of course, what you don't want to be remembered by, I kind of pointed out at the bottom left, is that there was somebody who kind of bought a pizza for 10,000 Bitcoin. But what we have seen is that as we kind of had a number of developers starting to look into this space and truly harness the potential and try to find the new utility and use cases, the space has evolved quite a bit. You know, as Ronit was mentioning, you kind of had first initial coin offerings which are expected to be stable in value and kind of adopt stable coins, kind of starts around the mid 2010s. You also had the Ethereum network, the concept of smart contracts, kind of further evolution, and then finally a fully backed and fully audited digital dollar project in the form of USDC. Along the way, you kind of started having the concepts such as decentralized finance. You started having Visa involved in this space and kind of making announcements of partnerships, new products. And this is kind of where we are today. But kind of to echo what has been said before in terms of the attention that this space has been getting over the last 12 to 18 months, that's definitely something that we as Visa have also truly seen as the topic of digital currencies has truly become, I would say, one of the top 3 priorities for majority, if not all of our clients who want to engage with us and kind of understand our position and kind of what we are doing in the space. But before going into that, I think it's important for us to define how we at Visa see this space. And this is, by the way, something that our executives have messaged on quite extensively and frequently in the last several months and quarters. And I think for us, the real distribution here is between the world of cryptocurrencies and fiat-backed digital currencies. In terms of cryptocurrencies, we at Visa see the existing cryptocurrencies today as kind of investment assets more akin to digital gold that we see users predominantly holding as investment assets, and at this point in time, without a significant use case for kind of mass everyday retail payments, which is where we really play as a company. Our approach is to, first and foremost, enable the consumers to be able to purchase these assets using Visa credentials, and as Helen mentioned, kind of grow our network of 35 crypto platforms and wallets and enable their consumers to cash into our credentials and start spending using fiat at our existing network of 70 million plus merchant endpoints globally. And I'll touch upon that in a bit as well. And secondly, in terms of fiat-backed digital currencies, this is kind of where both stablecoins and central bank digital currencies fall for us. And we see it as, in a way, an emerging payments innovation that has some potential, I would say significant one, to be used by both consumers and businesses effectively, and merchants, of course, effectively as the existing fiat currencies. And stablecoins that run on public blockchain networks for us are really just effectively as same as adding additional network to our system, just like an additional RTP or ACH network. Now, in terms of how we have seen an evolution and interest and kind of where these assets are and these concepts are today for us, I think in terms of interest in cryptocurrencies, consumers have had a massive increase in access to these assets within their existing financial account, and we expect this only to accelerate further. For context, and kind of while I was thinking about this and preparing for the conference, I recall that when I first looked into the space of crypto, and now purely as Nicola, not as Visa employee, in 2016, and again, just for speculation, kind of trying to make some quick money, it was very difficult for me to understand kind of how to enter and exit these assets. Kind of when do I own these assets? How do I access them? How do I sell them? When do I do I send it first? Wait for money, etc. And this space has kind of been addressed quite significantly by first and foremost crypto exchanges who have built multi or tens of billions of dollars businesses focusing on the retail use case. I'm sure that everybody on the call kind of has been notified that Coinbase listed for, I think, $85 billion or so a couple of weeks ago. But we also seen that this space has been addressed by kind of the leading fintechs in the space, both globally and regionally. And yet companies such as Robinhood, Square Cash App, PayPal, and even Revolut kind of giving their consumers the ability to access these assets throughout their apps. And we kind of see that evolving to really be a table stakes opportunity for a capability for fintechs. And thinking about the evolution of this space, we really see that the kind of crypto wallets and platforms will be trying to and looking to become even more integrated into kind of the existing payments ecosystem. And effectively, as they embed Visa credentials in their wallets, they enable their consumers to convert crypto into fiat and then spend value at our merchant network. Now, kind of shifting here and looking into stablecoins, this space has grown exponentially and phenomenally specifically over the last 18 months, but really over the last 3 years. And there's now over 70 billion of stable coins in circulation that power hundreds of billions of payment volumes each month. And kind of looking at some of the key use cases today for these phenomenal kind of numbers. And by the way, in 2020, the number of the total number of stable coins in circulation grew, I think, 5x, and it has already grew over 100% so far just in 2021. And kind of what's really powering this is three key trends from our perspective today, and that's emerging B2b payment flows, crypto asset marketplaces, and decentralized finance. But there are more than just these three. In terms of B2b payment flows, we have seen that there are new products that are kind of emerging that make it easier for non-crypto native businesses to use stablecoins and make B2b payments to employees and vendors as part of their treasury infrastructure. And I think Joao will cover this in quite a bit of detail. And this is why we kind of partnered with Circle, which we see as a leading stablecoin payment platform to make it easier for businesses to leverage USDC for new payment flows and connect to our network. Secondly, we have seen this phenomenon, I would say, over the last 6 months of non-fungible tokens really exploding in interest and in kind of capturing the public imagination, I would say, as well. And of course, some of the initial use cases that we all know about, such as NBA Top Shop, Sorare in Europe, kind of focus so far on the sports trading card use case, but this space is already growing into a number of other merchant verticals. I've seen kind of inroads into entertainment, people like, I don't know if people follow wrestling, but Undertaker, I believe, has issued his own crypto collectibles. Then you have bands such as Kings of Leon moving to this space. And then you also have the more traditional, I would say, the auction houses looking to sell valuable crypto art and kind of also being added to this game. And then finally, kind of in terms of decentralized finance, we've seen that, again, this global developer ecosystem, which is kind of harnessed and really built upon the original designs on Bitcoin and kind of added a number of new concepts. They have kind of started using stablecoins, and they're looking to make it easier for consumers across the world to effectively access a new set of financial services and applications, particularly around lending, crowdfunding, and insurance, but especially around lending. And today, we have seen crypto wallets kind of integrating new lending protocols into their products as they're looking to further expand the utility of these digital currency assets. And finally, this is not kind of happening in isolation from the public sector. We have seen, as kind of Brian has delivered in the first part of the session, that governments and kind of central banks across the world are really looking to launch kind of central bank digital currencies as a new form of digital cash for their economies. And we think that these initiatives will require both public and private sector collaboration to kind of research and determine the impact a CBDC would have, and kind of what is the best way to integrate it into the existing payments ecosystem and really make sure that the consumer experiences are improved upon and become even better rather than kind of being slowed down or adding additional friction to it. And if you think about, crypto strategy, I would echo what Troy has said, that this is something that every single player in our ecosystem, and I would say in financial ecosystem as a whole, needs to think about and kind of devise their own digital currency strategy. And it starts kind of looking at what aspects of your digital currency strategy you need to focus on in-house versus in which instances are kind of partnerships a better bet. And for us, we kind of focused on playing this role and really developing products and solutions and kind of partnerships and really serve as a bridge between our existing network of clients to a new set of crypto products and blockchain networks. And we started by announcing our digital currency API early in this year in February, And we are currently piloting it with the First Boulevard Bank in US, which is a kind of Black empowerment bank. And effectively, what we've done is we enabled them to connect to the infrastructure provided by our partner Anchorage, which is also a federally chartered digital asset bank. And that allows the customers of First Boulevard to buy and sell Bitcoin. And this was really just the first step in our positioning as this bridge between the digital currencies and a global network of kind of merchants and existing clients. And effectively, with this pilot program, we want to start and extend the value of Visa to our neobank and traditional financial institution clients by kind of providing an easy bridge and access to these crypto assets and blockchain network. And effectively, we also made it such that the experience is fully curated by the issuers themselves. And as mentioned, this product is currently piloting, and in the United States, we are really in the process of evaluating additional countries for expansion on one-to-one basis. And we'll be having some updates in the following months. And then secondly, we want to also make it easier for crypto partners to be able to connect to Visa network and issue these cards. And kind of Helen and the team are really front and center of that, and kind of joined by their colleagues in Europe and globally. But we've also seen as, once we onboard these emerging class of issuers, they effectively are already building their business in the world of crypto and digital currencies, and they're kind of starting to pay their employees in stable coins and also their vendors. And for us, they're also really just another form factor of the existing fiat, another way to represent it. So we are really focused on making it easier for this type of partner by letting them kind of settle in the digital currency they're already operating in, rather than kind of always having to effectively convert to traditional fiat and then send us a wire and kind of settle the obligation with Visa. And that is kind of one example of what we're doing in this space. We have recently announced, I think 5-6 weeks ago, our first test transactions that kind of allowed USDC settlement on Visa network over public blockchain rails. And finally, this space is moving incredibly quickly. And if you told me that 2-3 years ago Visa will be looking to enter this space, have a strategy, I would really find it hard to believe you at the time. But as we are seeing this kind of growing interest and a need for digital currency and crypto strategies from our clients, we're also developing a Visa consulting analytics capabilities that will kind of extend our traditional suite to the world of digital currencies and kind of help our clients find the right use cases for them, find the right kind of product roadmaps, and of course, go to market and other aspects of their strategy when it comes to digital currencies. And finally, we see this space as evolving quite rapidly. And we really believe that over the coming years, financial institutions across the world will be looking to, if nothing, experiment and try to introduce these new kind of digital currencies into some of their core products or net new experiences and payment flows for their end consumers. That's all from us.
All right, thank you so much, Visa, Nicola and Helen. Let me just check out. I can see there's some questions here in the chat. I'm not quite sure if those are for you. Near says here, what currencies are on the list of coming up with CDBC, and what about the digital euro project? I'm not sure. That is great work, Helen and Nicola, and I'm looking forward to see you at Coin Nation Summit. All right, cool. You're gonna be in touch there. I don't know if you have anything to add on the first part of that question. Nicola, what countries are on the list of coming up with CDBC, and what are the digital euro project?
So really, we are seeing that a number of central banks and countries globally are experimenting in this space. And I would say that from what I know, and by the way, I'm not the Visa expert in this field, but I've seen that Sweden is quite advanced with this digital krona project. And in terms of digital euro, we kind of expect to see some news in the second half of this year. But at this stage, I don't think we have a more kind of clear-cut view than that. And our team is kind of engaged with central banks globally, but as you can imagine, I can't really disclose which central banks they're discussing with and at what stages. And I think the second question is really more. I mean, I can answer it, but I think it's more a question for Joao. And the question, Joao, is from Asif Alana: is Circle issued USDC 100% secures against fiat US dollar?
Hey everyone, this is Joao from Circle. It is absolutely, and I can talk about it a little bit more as I cover USDC in my presentation. But yes, USDC is a fiat collateralized stablecoin, and it's 100% backed by US dollars. Yeah.
All right, let me just check here if I think that was the last question. Let me check in the chat. I think that's it. So maybe that was actually your cue, Xiao. So over to you, and let's cross our fingers for the screen sharing. So go ahead and share your screen.
Thank you. Let's do it.
Awesome.
Does that work?
Yeah, you just have to put it into presenter mode.
Yeah, I'll do that now.
Awesome. Thanks.
All right. Thank you so much for having me. Thanks, Nicola. Thanks, Aline, for inviting me. I am Vice President for product for Circle, and I'll talk a little bit more about Circle. I'll talk about US dollar coin, USDC, which is a stable coin that we issue for a while now. And we'll talk about this interesting use case that we see a lot of conversations around. It's something that we call payout experiences, and it's something that we have an ambition to work particularly with Visa on. But let's get going then. So first of all, to introduce Circle a little bit, Circle is one of the kind of the OGs when it comes to companies in the crypto industry. Circle was founded way back when in 2013 with the emergence of the maturation at that point of assets like Bitcoin. The vision for Circle is that public blockchains and crypto assets are really going to allow us all to reinvent or reimagine financial system infrastructures in a way that hopefully it's much more efficient, much more cost effective, and ultimately better for consumers. But right now, what Circle is focused on is on providing essentially what we call payments and treasury infrastructure for businesses that are really, really connected to the internet. So just as in the way that the internet allowed businesses to have native connectivity to digital forms of data and media and communications. We believe that we can do that for use cases around payments and treasury with this kind of technology for businesses. And we have been having tremendous success with our product suite, especially in the last year and a half as we have entered this space more broadly. Circle has done a lot in this space. We have processed hundreds of millions of transactions. We have custodied billions of dollars in digital assets for our customers. And in 2018, we developed and issued US dollar coin, or USDC, which I'm going to talk a little bit more about. So USDC is a US dollar collateralized stablecoin. So we have been talking today about these concepts, right? So it is a digital asset. It is a crypto asset. It is one-to-one backed by the US dollar. So the question that we just had now, the mechanism for USDC is rather simple. So the way that it works is and Circle is an issuer that only deals with businesses, but there are other mechanisms for consumers to get access to the asset as well. But in Circle's case, what happens is whenever a business comes to Circle with a particular amount of dollars, of US dollars, we segregate those US dollars into USDC reserves, and we issue USDC assets in the exact amount that business is interested in. and that amount of USDC gets added to what we call the circulating supply. And obviously a business can do the reverse as well. If they come to Circle with USDC and they want to redeem it back for dollars, we draw down dollars from reserves, give the appropriate amount of dollars to the business, and destroy those USDC tokens that they have handed us. So it's a fully collateralized digital token, and for that reason, it gets its price pegged to the value of the US dollar. As I said, it was launched in 2018, so it has been around for a while. It is governed by a consortium called Center. It's a consortium that was founded in 2018 when we launched the asset by Circle and Coinbase. The vision for that. The vision for governance when it comes to USDC is that we didn't think this kind of asset was going to be successful if it was something that was primarily driven by just a single private company. So we created this idea of a consortium. Circle and Coinbase are members today, and we're very interested in expanding the membership in various different ways. And I can connect folks to the Center Consortium if they're interested in later. We consider USDC the leading fully reserved and regulated digital dollar. It is obviously operated by companies such as Circle and Coinbase that are US-based, US domiciled, have US domiciled banks, partner banks. USDC has, from a settlement and reserve point of view, it's operated by US domiciled banks. Circle and Coinbase are regulated companies in different ways, but fully regulated in the US as well. And that's why we consider USDC as the leading fully reserved stablecoin. In terms of technology, USDC, we see it more as a standard. So today it is already present on 4 public blockchains: Ethereum, Solana, Algorand, and Stellar. And it's probably going to continue to expand into other public blockchains in the future. Just in the way that the US dollar, doesn't run on a single payment rails, right? It's obviously a standard, and it maintains its value. And then depending on the use case, obviously customers or businesses are going to utilize that in different payments rails. We see USDC in a similar way. Ethereum is obviously a super popular public blockchain for developers in terms of application development, but it has certain profiles of cost and scalability that's rather different from other blockchains like Solana or Stellar that might be more optimized for scale. And so that's why we see it's important for USDC to be present on multiple standards going forward. USDC has been growing really significantly. So it's just over $15 billion in terms of circulating supply. That means, that there are over 15 billion USDC tokens out there in circulation being utilized by consumers or businesses. And as you can see, it has been growing very significantly. Just at the beginning of 2021, it was still, a sub $5 billion asset, and it has been growing dramatically since. And it has, just under $1 trillion in that number is actually a little bit out of date now, but just under $1 trillion in total value exchange on chain. There are a few sectors where USDC is super strong in terms of use cases, and obviously this has been changing in the last number of years as the industry has been changing. It's super relevant, and it has been since the beginning as an on and off ramp, as people call, for crypto trading use cases, and then more recently for commerce and marketplace applications. What we mean by on and off ramp is obviously the way that people access those applications, access those use cases, and obviously starting from a bank account sometimes is not as easy, or it provides an additional step for consumers interested in these applications, and maintaining their value in USDC is seen as more efficient. So USDC is super popular there. USDC is the most popular stablecoin for liquidity and utilization in these decentralized finance protocols that I think we also talked about a little bit today. So all of these lending and borrowing and FX and exchange and other types of protocols that had been implemented on chain, they need a digital dollar to function, and USDC tends to be the leading option there. More and more then recently, we start to see USDC as a flexible settlement form for payments processing. That's one of the services that Circle provides. You know, essentially what we provide for businesses is the ability, one of the things is the ability for them to process payments and have settlement in the form of USDC. And a lot of businesses see that as beneficial because they can, with that settlement in that digital dollar form, they can you know, make payouts to other businesses around the world and do that in a super efficient and cost-effective way. It's also very useful as an on-ramp into other crypto treasury products. There are businesses more and more utilizing the benefits of crypto assets for treasury applications, whether it is you know, money markets or other forms of capital markets. We have seen it was super interesting during the pandemic, during the height of COVID, USDC being used as a bearer asset in a lot of developing economies where consumers were impacted significantly by inflation, by the devaluation of their currencies. In places like Argentina and Turkey, we saw a tremendous spike during COVID of consumer demand for an asset like USDC. Essentially, people just wanted to hold something that was dollar-based. And then this use case that people talk a lot about, one of our customers is a company called Dapper Labs. I think Nicola was talking about this. They issue digital asset gaming experiences, and one of the most recent ones that they have is this game called NBA Top Shot. You know, it's done in partnership with the NBA. Essentially, you can own popular moments from NBA games, and all of Dapper's infrastructure, including payments processing, treasury, all of that is done through Circle and in the form of USDC. Even though consumers are not actually aware of that because the experience is abstracted away. Imagine that in any application today, in any fintech where you have a dollar balance on your phone, that could be implemented with the services that Circle offers, and on top of a digital asset like USDC, as opposed to more traditional ways of implementing that. So let's talk a little bit more about this use case that we are interested in, which is this payout experience and the opportunities that we see in this space. So just to be clear, it's a super simple use case, right? And effectively, eventually, a business might need to do payouts to end users around the world. Essentially, they need to send money to end users around the world. We are particularly interested in use cases like marketplaces. So imagine an eBay or an Etsy or an Amazon of the world, right? Effectively, some of these marketplaces have users that sell something, a good or a service on the marketplace, and they need to be paid. It could be also an Uber. An Uber is another good example of a marketplace in that case. And those businesses, they need to eventually send value to these end users or to other businesses around the world. And obviously that's still super hard, especially when you're doing that across borders. It might be easy to do that in obviously countries where the banking system and the payments rails are developed, but as you start to get into developing economies or the countryside of some of these countries, it's just harder and harder for these businesses, for these marketplaces to expand into those regions if they don't have good payout experiences. Now imagine if instead of sending, normal money, normal dollars or electronic dollars even to those end users, that you could reimagine this experience where those end users now can hold a digital wallet, right? And digital wallets are a very interesting application because they can live wherever a mobile phone and a connection and an internet connection live, right? So they have a little bit of a lower barrier for entry, so they can penetrate these markets better. And if end users possess those digital wallets, then all of a sudden, one of the types of value that you can send to these end users is USDC, is something like a stable coin. Maintains the value stability, maintain the price stability that obviously is important on those use cases, but it has much more sophisticated quality attributes when it comes to reach. And imagine as well that if those digital wallets now have something like a companion Visa card, right? Which is something that Visa is working on significantly, and it's super great to see all of these digital wallets partnering and being able to issue Visa credentials. Then what you realize is that this is almost becoming a new infrastructure for payouts, and one that delivers the same user experience that end users demand from what they find today on a bank account that they might have. It allows them to receive the value from the craft or the good or the service that they have sold on the marketplace, and still be able to go, whether it's down the road to a supermarket to buy coffee and bread, or whether it is to go online and purchase something that they are interested in. It gives them the same user experience, the same ability and liquidity for the value that they earn on those marketplaces as what maybe either they are used today or they might be deemed as the minimal experience. But in doing that, you are potentially broadening the reach for payouts for all these businesses and marketplaces. And in particular, when we talk about what Visa has been doing in terms of potentially adding USDC as a settlement currency on the network, and the pilot transaction that has been done a couple of weeks ago, where then those digital wallets, right, with a companion Visa credential, these end users can pay for something. It's going to be debited by their USDC digital balance on the digital wallet, and actually those digital wallet providers can pay the Visa network also in USDC. You are almost now closing the entire loop where a lot of efficiency can be injected into the system. Removing friction, removing costs, removing delays. And so we're super interested in that use case, and we'll continue to work on this to deliver more steps throughout this year and the next. As I said, the benefits are obviously much faster, much cheaper, and with a much broader reach payout experiences for businesses and consumers. They can leverage these digital wallets in similar ways that they leverage bank accounts. There are people who say that digital wallets might become the next generation bank account experience, and what's the role that banks should play in that. And as I said, with Visa's native support for assets like USDC, the efficiency for this end-to-end flow will only continue to grow, and this is super interesting as an evolution of the system that we have today. So that's what I wanted to cover. I'm happy to answer any questions about this, about USDC or else.
Thank you so much, Rao. I think we have a couple of questions here, so I'm just going to read out from the Q&A here. I think we'll start from the bottom here. There's a question here from Klaus Goning. When does Circle issue a European stablecoin? Or Europe? Yeah.
We hope to do that very soon, as soon as we can. USDC has been super successful, but in a way, as I said, a lot of the use cases where USDC played a role, they were very crypto-centric in nature, and crypto capital markets and exchange markets are still very dollar-based. So in a way, while that was the bread and butter, as we call for USDC, there wasn't a demand for, a real market demand for other currencies. Now it's completely different. Since around about, late 2020, we see a lot of demand from other regions. And we think, honestly, that the euro and a euro coin would be the next asset from a demand point of view. And we are taking steps this year to make progress on that front, and hope to have more news on the Eurocoin asset later in 2021.
Cool. And then there's another question here. As a bank group treasurer, why should I put my clients' deposits in US govies at 0% if I can get up to 7.5% for staking USDC if they're fully insured?
Yeah, that is a great question that I think a lot of our customers are asking as well, and we're trying to get them to understand the risk and reward profile to make sure that they can tap into these new types of offerings. Circle is actually about to bring to market an offering where businesses will be able to deposit USDC with Circle and have access to high yield accounts that are, where essentially the USDC is being lent over to these capital markets, to these crypto capital markets, and the interest rates paid on that capital are really, really significant compared to anything that is out there. These products, the product that Circle will offer is it will be partially secured, so there will be some level of security there for businesses, because obviously that's interesting. These offerings, they have a different risk reward profile. Obviously, interest rates, when you talk about 7.5%, 8% a year return, which is what some of these products can deliver, it's obviously significant. But currently they are regulated in a different way. They have specific attributes, and I think we are educating our business customers in understanding what are the risks involved, because there are risks, they're just different. But I certainly think it's going to be super disruptive when we introduce these products hopefully in the next quarter or so.
All right, I hope that answers the question. Otherwise, please write in the Q&A here if there's additional things. So here regarding NBA Top Shot case, what does this mean? Does this mean consumers can earn money or usage rights by the media of those shots?
Oh, that's a good question. I'm not an expert on the game itself. I know that those moments are being effectively issued by the NBA, by the association themselves, in partnership with Dapper Labs, and I believe that the end users, they have a level of real ownership, and this is the beauty of some of these digital assets on chain. You can actually go back and have proof of issuance and proof of ownership and etc. There's a lot. These games are super interesting now. There's a conversation around issuing some of these moments initially to the player that was responsible for the play, so that it becomes sort of the next generation of a digital autograph, if you want. So a player can give that out to consumers, just as in the past they would write sign on your jersey, on your T-shirt kind of thing. That becomes something that they can give out to their fans. There are super interesting use cases, but I'm definitely not the expert about actual ownership of rights.
Right, I think, and you're right on time here. I think that's any other questions. You're also welcome to unmute yourself or write in the chat. All right, just gonna see here in the chat. No, that seems to be it. Great. Thank you so much for your presentation. Exciting stuff. I'm gonna ask Mads, who's the next speaker, Mads from Settlement. I think this is a very nice segue into your presentation also, Mads. Again, thank you very much, Yao. Then Mads, I can see you're on and you're already sharing. It's great. And are you unmuted?
Yeah. I hope so.
Awesome. So, Mads, you're one of the companies that has been previously in our incubation program, and now you're part of the Danish FSA's regulatory sandbox. So, thanks for joining us for this webinar, Mads, and take it away. You have 10 minutes.
Thank you, Thomas, and thank you for the opportunity to speak here. So my name is Mads. I'm co-founder and CEO of Settlement, and see here, we do effortless global trade between small and medium-sized enterprises via smart contract software. So right down the alley that we've just talked about here. Small and medium-sized enterprises, they form the backbone of most well-functioning economies, but manual trading processes, lowers profitability, scales poorly across borders. And at a global level, we are talking about $1.5 trillion lost in transaction every year. Underneath this $1.5 trillion lies the fact that payment systems have been neglected for too long, as also recognized by some of the talks that we've just seen. The Bank of International Settlements estimate that 6 out of 10 cross-border B2B payments require some form of manual intervention, each taking at least 15 to 20 minutes. At a more foundational level, though, founders don't start businesses to do payments, administration, and accounting. And that's basically the challenge that we are tackling by making the invoicing process as we know it today completely redundant with smart contract software. Essentially, we're able to take a digital handshake on the order, a goods receipt notice, or down the line also IoT data triggers or GPS data as inputs for doing the payments for the SMEs. Essentially, if a set of business conditions are true, then settle. Our MVP is live on the Algorand mainnet. It uses real euro to do the settlement of the trades. It has strong customer authentication via a smartphone app that we have built. And then it's embedded into the B2B workflows with a simple overlay. That means it's super lightweight to integrate into existing workflows because we want to reduce the friction it actually takes to get it into the hands of the SMEs and the way that they do business today when we talk about making the purchase orders and actually receiving the goods. Under the hood, it uses so-called delicate keys on Algorand, which means that we can extend the business logic any way we want and use any kind of data to actually trigger the settlement. On the cloud side of things, we're using microservices architecture such that we're able to scale with user growth. In terms of timing, we believe the timing really is right for this now. So before incorporating the company formally, we established a partnership with the world's first issuer of e-money to blockchains, a company called Monero, who I have worked with for close to 2 years by now. Furthermore, we're building on the enterprise-grade blockchain Algorand, where one of the big benefits is that it's using proof of stake, such that we avoid the heavy energy cost of proof of work. What we're quite excited about, also when it comes to the regulatory sandbox program that we've been selected for by the Danish FSA, is that the Danish FSA, they can see the potential here, and they have really, our experience has been that they have been super positive and curious in terms of exploring what is the risk and rewards here, but definitely also that there is potential. So here from the official press release that they send out, the use of blockchain and smart contracts have the potential to change the way in which payments are settled by providing a more flexible and automatic alternative to existing solutions. Of course, this is what we're going to explore here in Q2 in order to make sure that what we do is regulatory compliant so we can get the product in the hands of SMEs. The way you can think about our solution is really as a mix of 4 alternatives that are in the market today. There's cross-border payments, open banking APIs, transport data collaboration, and trade document digitization. The central idea that we're bringing to market here is that you can spend 0 time on doing the payments because we're intercepting the purchase order. This is what allows the settlement process to run in parallel with the transaction instead of being something that happens at the end of it. Furthermore, the infrastructure is extensible, and that's of course because we use blockchain, which is really what makes us different from players like Wise or Tim. At the same time, though, we are in the payment space, which makes us quite different from players like TradeLens and Contour, who's actually building, you could say, informational supply chain solutions on blockchain and DLTs. The big question we have when joining the regulatory sandbox here is to be or not to be a payment service provider in all of this. And essentially, the reason why there is this question is that blockchain is different. You have direct digital control on blockchains by the end users. This is what is new. This is what has been talked about for 10 years. And finally, we're at a point where we actually need to take this into the real economy And this is really a point that makes it different in terms of how the technology and the regulation plays together. And that's what we're exploring here in the Regulatory Sandbox program. In terms of the journey we've had, both as a company and in dialogues with the Danish FSA, I'm just going to go over that here. So we secured our start capital at the end of last year. I resigned my job at the B2b platform company TradeShift in Q2 of last year, and then started out on this journey full-time in Q3. Then we were able to secure our starting capital from Borderless Capital, an American-based VC fund, and the Innovation Fund here in Denmark. This is what allowed my co-founders to join me at the start of this year. So you see Jason here, he was a blockchain specialist at Deloitte before he joined. The most recent thing he did there was take a solution from idea to production for supply chain transparency in the food and beverage industry. In Q1, we were then selected to the Danish FSA's Regulatory Sandbox program, while we also built the MVP and established our partnership pipeline. What we really liked about the approach that the Danish FSA had was that it was an iterative process where basically we talked through what is the core elements that we need to understand and test out here. This is what got us accepted, and now we have a dialogue-based process in the Regulatory Sandbox. Furthermore, we are, while in parallel to that, starting to have the coffee dialogues around the next investment round. The reason why we're doing this is to get the product into production in 2021. And our belief is basically we need to take a proactive approach to regulation. The companies that do that, those are going to be the successful one building on blockchain and DLTs. So that's really the direction we believe we and other companies that want to service SMEs really have to take. So in order to get there, we really need to have a good dialogue with the Danish regulator, and that's what we have had so far. It's what we believe we will have throughout here Q2, and hopefully also going forward into Q3 and beyond. We also believe this is really Denmark at its best, where we have public sector and private sector collaborating on making sure that we can service SMEs and actually do this digital transformation. Even though Denmark is at the forefront today, that we really have an opportunity to continue to stay that way when it comes to B2B trading processes. So to summarize, we deliver effortless trade via smart contract software. We have built our MVP. It moves euro, not stablecoin, e-money, and thereby euro on Algorand. We have had a dialogue with the regulators from all the way Q3 last year till now, in order for us to get the product in the hands of the SMEs here in 2021. So with that, I just want to say thank you, Thomas, for introducing settlement and also our process with the Danish regulators. So maybe we can go to questions.
Great.